Now we take you to the 5 things you need to watch today. Number 1, it is the big takeover in cable television. Charter agreeing to buy Time Warner Cable for $55 billion. There was a statement moments ago from the Federal Communications Commission saying the following, quote, the FCC reviews every merger on its merits and determines whether it would be in the public interest. In applying the public interest test, an absence of harm is not sufficient. The Commission will look to see how American consumers would benefit if the deal were to be approved. So, Stephanie, this is a bit of Tom Wheeler talking out of both sides of his mouth. On the one hand, he picks up the phone and calls Tom Rutledge, the CEO,
and says, we're open for business. You know, we're not saying deal-making, not open for business, but deal-making welcome.
And then finally, we see the deal, and Tom Wheeler strikes a bit of a different tone.
That's what doesn't... Well,
maybe this is Wheeler just saying what he has to say. As chairman of the FCC, we have to review every deal. We have to make sure that it's in the best interests of the American people.
I think so, because had he not, couldn't one make the argument, hold on, he makes a completely out-of-character public call last week, calling guys saying, no, think about it, we're fine with it. And then to let the deal simply go through, I don't know, I don't think that would have gone so well. He's got to make a statement like this.
You know. Got to keep up appearances, right?
Okie doke, he does. How about number 2? That's what I've got. The strong dollar. The U.S. dollar jumped to an almost 8-year high against the yen. The dollar strengthened following Fed Reserve Chairwoman Janet Yellen's remarks on Friday, saying it would be appropriate to raise rates this year if the economy improves. And, Eric, that's what this stance is all about, trying to get a sense how strong the economy really is and when they can actually make this move. When you speak to bulls, they say it could have happened a year ago, but the more and more people we talk to in the market who are so addicted to the support they're getting from central banks, they love to say, no, things are really fragile.
I am growing, I'm sure you are too, a little bit tired of this guessing game. I'm going to channel Stanley Fisher, right? It's not about the data, it's about the data. It's not really about when, it's how fast they raise interest rates. Who cares when the first 25 basis point hike comes? It's when the next 75 or 125 come that matters.
It's not about the data, it's about the data. But if Michael McKee were here, he would say to us, there are so many data points. Depending on who you're speaking to, that individual decides, well, this data matters, and oh, that one, no, it doesn't. The jobs number, we'll forget it. That doesn't factor in X, Y, or Z. So I just think, you know, everybody's talking their books. Surprise, surprise.
All right, number 3, Julie Hyman.
Let's take a look at what's going on with stocks today. Expensive, you could say, is the new cheap. Banks now appear to be the least expensive industry on the S&P 500. But, guys, it's all relative. They're trading at 17.6 times trailing earnings. The S&P overall is trading at 18.8. Only once has the cheapest sector in the S&P commanded a higher valuation than 17.6. In other words, cheap ain't that cheap.
Well, I mean, welcome to the bull market. I mean, I just heard, if you look at how well companies are doing, S&P companies, this was, you know, Carl Icahn's argument. If you would just invest in the S&P, a lot of these companies aren't superstars. People are just investing to take the ride.
So you like beta better than alpha?
Listen, if you actually look at fundamentals, look at the tech industry. Look at the valuations. You've talked about it. Think about Shake Shack. A restaurant, yes, it may be delicious, but a burger place with 7 menu items.
Crazy.
Crazy town. But they're saying, guess what? We might serve chicken sandwiches now. That'll really give reason for the ridiculous valuation. All right, I have number 4, or cuatro in Spanish. We have got the data to watch today. We're just talking about the importance of all of it. Durable goods numbers coming out in about 30 minutes. We've also got Case-Shiller home prices at 9 a.m. Eric, it's about what data do you care about?
I'm not sure durable goods is at the top of my list. I am interested, like Case-Shiller is a bit of a lagging indicator, but I'm fascinated to see all the same, you know, where we are in the home price recovery, whether we're...
I'd like to see if anybody is going to take down that $500 million house in LA.
Well, we're not going to get that at 8:30.
I'm just saying that's the number I want to see.
All right, number 5,
and if
everybody.
that person's going to invite me over.
Fiat shares. Have a look at these. Down following a New York Times report that General Motors rejected Sergio Marchionne's overture to discuss a merger. Marchionne has been outspoken since last year, in fact, about the need for consolidation in the auto industry, for there to be global companies. Fiat Chrysler, big company, number 3 here in America. As far as Marchionne is concerned, not big enough.
Of course he's not. Again, talking his book. If you're Marchionne, that's what you want, a bigger business.
The difference, though, is that we had heard So he first raised this idea in the past, and we had heard from people close to Fiat that other automakers, including Ford and General Motors, had expressed no interest. We had not known until now, thanks to the New York Times, that Marchionni actually wrote out in long form, in an email to Mary Barra, his desire to complete a merger.
You know,
she didn't even grant him a meeting.
She didn't.
No.
You know the automaker CEO that matters to me most, Rolls-Royce CEO, who told Erik and I he doesn't feel threatened by Elon Musk and the driverless cars. They've had driverless cars for decades.
A century, in fact.
Called the chauffeur.